Thanks for joining here today. We're going to give just a minute to let everyone get in and get settled. Okay, let's get going. Welcome, agents. Thank you so much for joining us. We know your time is valuable, and we really do appreciate you spending some time with us here today. Today, I'm really happy to have Nathan Akers from National Gold Consultants here with me. Nathan's a seasoned expert with over 20 years of experience in the financial industry. Right now, he's currently the Director of Advisor Relations at National Gold Consultants. His deep understanding of the investment strategies, which, like many of us, were shaped by the experience during the 2008 Great Recession, has made him a leading voice on the role of precious metals as a key diversification tool. So today here in the session, in this webinar, Nathan's going to break down some of the misconceptions around gold and silver and show how these assets can protect clients from inflation and from market volatility. I think if you're on this call, you probably believe that there's a place for silver and gold in everyone's portfolio, which we definitely do. And we're really happy to have Nathan talk more about how you can help your clients access gold and silver for their portfolios. And I really encourage you all to take 2 or 3 points away from Nathan's presentation here today, something that you can bring to your clients to really help them and in turn help you grow your business. And maybe jot down names of those clients that might be a good fit to bring some of these ideas and solutions to. If you do have questions along the way, please throw them into the chat. We'll do our best to answer questions. If we don't get to any of your questions, we definitely will follow up with folks after the call. But we definitely will do our best to get to those questions here at the end of the session here. And with that, I guess I'll turn it over to you, Nathan.
All right. Well, thank you for that very warm introduction, Chris. Really appreciate it. I'm glad to be with you all here today. We're going to talk through really how to unlock the power of gold and silver with your clients and in their portfolios. It's a great way to grow your business in uncertain times. So I'll start out really by telling you a little bit about National Gold Consultants. We're based here in Minnesota. We've been in business a little over 15 years, almost 16 years at this point. And one of the things that really sets us apart is that we're a gold and silver wholesaler, and we only work with agents and advisors like you. We don't sell direct to the public. You're never going to see us, on, advertisements on TV or on the radio, anything like that. And we avoid doing that because we feel like gold and silver really needs to be considered in light of everything else that a client is already doing. This is just one piece of the puzzle that fits in with everything that they're doing. And who better to help guide them to put that puzzle piece in place than you, their trusted agent. So with that, we'll dive right in. I'm going to turn my camera off so I can focus more on the presentation, and you guys don't have to look at my smiling face the whole time. But we'll dive in now to the next slide, which is really all about clients are asking for gold and silver right now, and they can get it from you. They're hearing about it everywhere. It's all over the internet. It's on TV. It's on advertisements. It's on the radio. And so many clients are really looking for a trusted source. And that trusted source is you. They're seeing it everywhere, and they need somebody to lead them for how to do this properly, how to allocate it properly in their portfolio. Otherwise, they're just getting thrown to the wolves. And the reason why they need this is there are so many economic storms on the horizon right now. Whether it's the threat of the dollar being dethroned as the world's reserve currency, that has been under threat for decades now, and it's accelerating rapidly. The petrodollar is going away. You've got the BRICS countries saying that they want to create their own currency that's backed by gold. And whenever that happens, it's not going to be a good thing for the dollar. In addition, you've got inflation. Everybody's still concerned about inflation. They're hearing in the news that inflation is going down, but they're still seeing it in their groceries, their gas prices, their healthcare costs, all of that. You've got concerns about taxes. That taxes are most likely going to go up. Look at the new plan that's being proposed by Kamala. You've got the threat of a digital currency. You've got the Federal Reserve saying that they want to create a digital currency to wipe out the last bastion of privacy that clients have, just being able to spend cash without it being tracked. You've got this threat of a default spiral, a credit default spiral. This is something that we've been hearing about for a year or so now, with so many banks that have leveraged and lent so much on commercial real estate. Especially, at values that are incredibly overinflated. And you've got these borrowers that suddenly have these loans coming due, and they're going to need to refinance them at much higher rates and at properties that have decreased in value, which could lead to this default spiral, because one defaults, then another defaults, then another defaults, and it could just drag the whole system down. Very similar to what we saw in 2008. You've got the threat of bank collapses. We already saw some of that last year with Signature Bank and Silicon Valley Bank. So, it's a very real concern that clients have. In addition, rate hikes. Is the Fed going to hike rates again? Are they going to lower rates? We think they're going to lower rates, but who knows? We don't know what the Fed is going to do. You've got all the concerns about the election. Where is it going to go? What direction is it going to turn? How is it going to impact our future as a nation? And then you've got these, wars. You've got, Russia at war right now with Ukraine. You've got China threatening Taiwan. You've got, Israel and Gaza. This geopolitical threat, could spill over, and could the U.S. be dragged into that? Could that affect us? And then on top of all of that, kind of the backdrop to all of it is the deficit. Deficit $35 trillion and rising, roughly to the tune of $1 trillion every 100 days at this point in time. So we as agents and as financial professionals can see all of these economic storms coming in. And when you see a storm on the horizon, the thing to do is prepare. It's time to batten down the hatches. It's time to make sure that you're ready for when the storm hits. And with all of these, storms, the question becomes, well, what's the solution? What's the solution to all of these storms? How can we solve all of these problems with just, one or two things? And the solution, really, we like to say, is using physical gold and silver as wealth insurance. Because physical gold and silver has this inverse relationship to all of these other asset classes. It protects us against inflation over time. It protects against, real estate crashes. It protects against stock market crashes. And really, that inflation protection is why gold and silver, in my opinion, goes very, very well with indexed annuities. Because with indexed annuities, we can protect somebody's, principal. We can guarantee them lifetime income, but we don't have a tool in there necessarily to protect them against inflation. So if we add gold and silver along with their indexed annuities, we give them that guaranteed lifetime income, and we protect that income that they're going to be able to, maintain their standard of living over the long haul. I like to say that it's kind of like peanut butter and jelly. They go best when they're together in a PB&J. So what does gold and silver mean for you? What does offering gold and silver mean for you and for your clients? Well, first of all, it sets you apart from the competition. The thing is, hardly anyone in the industry is talking directly to their clients about gold and silver. They're just being left to the wolves. And people are afraid to talk about gold and silver because they don't understand how simple it is. It's a really easy, simple solution for clients. It sets you apart, it adds value. This is a reason that you can go back to clients that you've already sold to or prospects that potentially didn't buy from you in the past. Then there are some other really great benefits. With physical gold and silver, there is no underwriting. It's not like a life insurance contract. The suitability requirements are very, very simple. They're not as stringent as on an indexed annuity. You get paid commissions in days. We pay commissions every week on Fridays. And there is no need for a securities license. Just your standard insurance license will cover this. You don't have to have a special license to add physical gold and silver to the products that you offer. Once again, this really fits in well with everything that you're doing. So many of us are offering our clients fixed indexed annuities and life insurance already. Maybe we're doing a little bit of assets under management, and gold and silver fits right in with that. If we think about a money tree, this is just another branch coming off of that tree. This is another way that we can help clients, and it's also another revenue stream for us as agents. This is a way that we can protect them from inflation. We can guide them, and we can, grow our business, in times that are a little bit uncertain. Now, speaking of getting paid, I've mentioned this already, but you do get a commission on anything that you sell. And we process and pay those commissions every week on Friday. So it's a 4% commission on any non-qualified sale that you make. So any of their money that's outside of their retirement accounts, you're going to get paid 4% on that. But we can also do gold and silver IRAs. We have that capability, and it's very easy, and we do it right. And on those, you get a 3% commission. Once again, it's paid all up front, and there are never, ever any chargebacks on this. And your clients have complete liquidity within gold and silver. We recommend that they hold for 5 years to allow their metals time to react to changing market conditions. But they could buy this month and 2 months down the road decide to sell, and you're not going to see a chargeback on that. And they have complete liquidity. So let's dive into why physical metals. Why not an ETF or a mutual fund? Why not paper, gold, and silver? And the real answer to that, I always like to answer this question with a question to you. At the beginning of the pandemic, when you couldn't find toilet paper anywhere, would you rather have had a big multi-pack of toilet paper at home? Or would you rather have had an IOU, good for a big multi-pack of toilet paper? I don't know about you, but I would much rather have had the multi-pack of toilet paper at home instead of running around to 5 different stores to find toilet paper for my family of 4. Now, the reason why this is such an apt analogy is when you look at, gold and silver ETFs or gold and silver mutual funds, those funds are not buying actual physical gold and silver. They're buying gold and silver futures. So it's essentially an IOU that a client is buying when they buy those funds. But then that fund company isn't just selling that IOU to you. These funds are often highly leveraged, up to 200 to 1, meaning that same IOU that they're selling your client, they're selling it to 200 other people. So when a client really needs gold and silver, there's no guarantee that it's there, and there's no guarantee that the company is going to accept their IOU. The other reason why we don't recommend ETFs or mutual funds is that these get traded in the stock market. And along with everything else, when we see the bottom fall out of the market, these tend to get jerked around with the rest of the market. So when everything else is falling, you'll see these gold and silver ETFs fall as well. And that's because they're used as an investment vehicle by large hedge funds to hedge other parts of their portfolio. So when everything else is falling, if they've got margin calls, well, they have to sell their gold and silver, and that's going to pull the value of it down. Whereas physical is separate from the stock market completely. It's independent of it. And we'll look later at how that really, really plays a big advantage for you. So, why National Gold Consultants? Why would you want to offer gold and silver through us? Well, I would say the number one reason is because there aren't really any other choices. If you want to offer your clients gold and silver, we're one of the few places that will partner directly with you. And we believe that your clients are your clients. We're never going to go around and try and, steal your clients behind your back. In fact, we've been in this space, like I said, almost 16 years, and we've built this business by partnering directly with agents and advisors like you. That is our entire business model. We exist to help serve you and to help serve your clients. And by acting as a gold and silver wholesaler, we cut out those outrageous markups that retailers charge. We don't have to pay for the fancy advertisements. We don't have to pay for the fancy retail space. And because of that, we're able to offer your clients dealer direct pricing instead of retail pricing. And with that dealer direct pricing, we're able to pay you a commission because you work hard to serve your clients and you deserve to get compensated for the advice that you provide them. We try and take really a consultative approach and an educational approach, both to working with you and with your clients. We've got many different tools that you can tap into to help bring up gold and silver to your clients. Everything from, doing joint calls with you and a client that's interested, training you on gold and silver, whether that's, a one-on-one training or an online training program that we have that I'll talk more about later. We can do educational webinars with you and your clients. If you get a large enough crowd together, we can do in-person seminars with you and your clients on gold and silver and how this fits in with everything else that they're already doing. In addition, we've got all of the marketing collateral to help you bring this up with clients. Everything from our investor's guide to gold that's in printed form, our product guide that outlines exactly what we use and why we recommend using it, to we've got client-focused videos that are available on YouTube, and we can brand all of this to you for free for no additional charge. It's free because we know that people need to hear about gold and silver from you as their advisor. I love those client videos that we have available online that we can brand to you because they're hosted on YouTube. They're very short. They're 2 to 3 minutes long. They really capture the attention of a client. And with those videos, we run through why somebody would want to own gold and silver, how much they should have. We talk about the different types that are available. Then we go into what we recommend if they're using non-qualified funds. And finally, what we recommend if they're using their qualified funds. So we really do try and do this as a partnership with you. And that's why we work with over 1,500 advisors throughout the US and why our network is rapidly growing, because there are so many storms out there right now. People are seeing the need and they're responding to that need. So why now? Why should you start bringing up gold and silver now with your clients? Well, because your clients are concerned about all of these things. They're concerned about inflation. They're concerned about, our national debt. They're concerned about the direction of our government. They're concerned about all of those things, and for very, very good reasons. This chart right here shows why, if you're not concerned and if they're not concerned, they really should be. This is a chart of the M1 money supply, looking from 1975 until the end of July of 2024. And we can see how from 1975 really until that Great Recession in 2008, our monetary supply stayed fairly flat, growing ever so slightly over almost 3 decades. And then with the Great Recession that we had, the Federal Reserve, instituted quantitative easing, which, as I like to say, is just a really fancy way of saying printing money. And you can see how our monetary supply really took off from 2008 to 2020. It grew from roughly $3 trillion, well, about $1 trillion to $4 trillion. It gained about $3 trillion over the course of almost 11 years. But then in 2020, we can see it absolutely skyrocket. And that's when the Fed decided to just print so much money as a way to help pull us out of the pandemic. And the result of that is just inflation. And inflation, as we all know, is just a loss of purchasing power. It's too many dollars chasing too few goods. And so our grocery prices have skyrocketed. Our gas prices have skyrocketed. We're seeing it across the board, and clients are concerned about this, and they don't know how to handle it. And really, they should be concerned, because if we look at this chart, which I really like, it looks back at the US dollar purchasing power from 1913 until today. And the reason why it starts in 1913 is in 1913, the Federal Reserve was created. And what a lot of people don't know about the Federal Reserve is, in spite of the fact that it has the word federal in the name, it's not a government entity. It's, a private entity. They have their own vested interest. And in fact, it's owned by large banks, which is just great for all of us. So if you go back to 1913, a dollar would give you a dollar's worth of purchasing power. Fast forward to where we are today in 2024, and the dollar has lost 97% of its purchasing power since the creation of the Federal Reserve in 1913. So they really haven't done a very great job of protecting the dollar's purchasing power. And in the last few years, as I mentioned, to combat the COVID pandemic, the Federal Reserve has added over $15 trillion to our monetary supply as a nation. And we hear the word trillion so often today, so often, that we have just lost all perspective on what a trillion means. I like to tell people, look, you've never seen a trillion of anything in your life unless it's the pebbles of sand that make up a beach. But to give people perspective, I like to use a second. So 1,000,000 seconds is 11 and a half days. It takes 11 and a half days to live 1,000,000 seconds. 1,000,000,000 seconds is 31 years and 8 months. So it takes, almost 32 years to live 1,000,000,000 seconds. Now, a trillion seconds is 31,688 years. That's an incredibly long amount of time, but it gets even worse because we've added $15 trillion to our monetary supply. If just in the last 3 years, if you printed $1 every second, it would take 475,320 years to create the amount of currency that we have created in just the past 3 years. And I tell people, look, this is the real reason why you're seeing the inflation numbers that you do, and why that inflation isn't going away anytime soon. It's like squeezing the toothpaste out of a toothpaste tube. You can't just easily put that toothpaste back in. The other reason why this is a big problem is if we go back to the old thought about the dollar being dethroned as the world's reserve currency, right now we've been able to export a lot of our inflation overseas to other countries that have to hold our dollar because it's the world's reserve currency. Now, when the dollar gets dethroned as the world's reserve currency, all of those dollars are going to flow back to the US. So if we think inflation is bad now, it's nothing compared to what it will be whenever the dollar isn't the world's reserve currency, as those dollars flow home, as those chickens come home to roost. Now, the question becomes, what does this have to do with gold and silver? How does gold and silver help protect your purchasing power over time? And I always use the example of the Mustang. In 1964, when the Ford Motor Company released the iconic Mustang, the base model sold for a little under $2,400. Now, what's fascinating is the same amount of money that was worth $2,370 in silver in 1964 is worth almost $95,000 today. So it's really, really grown if you had silver. Whereas if you had $2,400 in cash, you would still just have $2,400 in cash. Now, that $94,800 is worth enough today that I could go out and buy a top of the line 2024 Ford Mustang Dark Horse and still have $30,000 left over for all the tires I'd shred in that thing and the gas that I would guzzle. So physical silver not only protected your purchasing power, but made it so that you could exceed your purchasing power over time. And the numbers are even better on the gold side of things. The same amount of gold that was worth $2,400 in 1964 is worth almost $175,000 today. So by buying physical gold and silver, essentially what you're doing is you're buying tomorrow's goods at today's prices. It's a way to lock in your purchasing power. This is really all about keeping balance in a client's portfolio. What I constantly tell people is the vast majority of clients have their assets tied up either directly in the dollar, the stock market, or real estate, or indirectly in those asset classes. And the problem is that those asset classes tend to move with one another. When the dollar falls, we see the stock market fall. When the stock market falls, we see real estate fall. And when real estate falls, the stock market falls. And the dollar tends to get dragged down because they dilute it, trying to prop everything up. So if you think about an old seesaw, a teeter-totter from when you were a kid at the park, you need somebody on the other side of that seesaw to provide that counterweight, to balance out swings in a client's portfolio. And that's where gold and silver comes in, because gold and silver, physical gold and silver, has this inverse relationship with the dollar, as I've shown already, real estate, which we'll look at next, and then the stock market. When all of those assets go down, historically, that's when physical gold and silver rises in value. And I also like to just kind of point out the inverse is also true. You know, I enjoy making the audacious statement, look, I hope that somebody buys gold and silver and the value of it falls. Because we're not talking about putting all of a client's assets into gold and silver. We're typically talking about a small percentage, and that means everything else that they have is doing great. Once again, this is about maintaining their overall wealth level. It's balancing out everything. Now, I mentioned how the dollar and real estate are inverse to each other, and this chart really highlights that for us. This is a chart that compares home prices in the US to the value of gold from 1988 until 2020. And you'll see that home prices is the blue line, gold is the purple line. And what you'll notice is they're almost a perfect inverse of one another. When housing prices are high, that's when gold prices are low. When gold prices are high, that's when housing prices are low. This is a trend that even if we pulled the chart out further, it would continue to show that because they move opposite of one another. They have that inverse relationship with each other. And this is all about maintaining, your client's overall wealth level. The problem is we see so many people that just decide I'm going to stick with real estate. I'm not going to, diversify beyond that. Or I'm just going to buy gold. I'm not going to diversify beyond that. When we have these asset classes that move inverse to one another, that move opposite of one another, your clients really need to own both of them. Now, let's take a look at how gold and silver, have moved inverse to the stock market. This chart looks at the largest declines of the S&P 500 over the last 50 years. And what you'll notice is how during every single major market decline, when the S&P 500 was down double digits, physical gold and silver were up double, if not triple digits. Once again, it just highlights that inverse relationship that these two asset classes have to one another. Now, I'm going to stay on this slide for a moment because I want to talk here about how gold and silver goes together with fixed indexed annuities. We all know fixed indexed annuities. We love fixed indexed annuities, and most people need to own one. And one of the things that they love about them is when the stock market goes down, they're not losing any money. So in these periods where the S&P 500 is down double digits, if they're in an FIA, they're not losing money there, but they're also not making any money there. So that's where if you add gold and silver with the indexed annuity, in those periods where their FIA is flat, their gold and silver, look at these numbers, is up phenomenally. And what I tell people is buy gold and silver now when prices are low and sell it when prices are high. Because what happens is historically, whenever we have a major stock market crash, we see people tend to run to three different asset classes. The first would be indexed annuities, which is great. They're protecting what they have. The second is they run to treasuries, whether it's T-bills, T-notes, or T-bonds. They're looking for some sort of safety. And the third is they run to precious metals. And what happens is when we see these huge inflows to precious metals at the time, we have supply and demand at work. There's a limited amount of gold and silver that's out there for investors to buy. And when we have that huge demand hit the limited supply, we see the value of gold and silver rise substantially. So if people buy gold and silver now, when everything else is up high, that's the time to take a look at what they own and take some of their gains off the table and buy everything else when it's low to really set them up for the future. Now, once again, this is all about keeping balance. And I mentioned earlier on here, and I mentioned earlier in the presentation, we don't recommend that people put all of their money into gold and silver. In fact, our recommendation for how much gold and silver a client should have is only 10 to 15% of their portfolio. That means, the other 85 to 90% of their assets are still out there. They're still working. They're on the other side of the seesaw. We're not trying to take away from anything else that they're doing already. What we're trying to do is complement it, come alongside it, and help balance out those market swings that they might have in their portfolio. And that 10 to 15% number isn't just pulled out of thin air. That number is backed by research. There's a company by the name of the CPM Group. They're a commodities research firm, and they've done a study twice now of what happens, to a portfolio if a client buys gold, if they add gold into that portfolio. And so they back tested a balanced portfolio from 1968 until 2020. And that time period is very important because it covers when we were on the gold standard, when we were off the gold standard, in bull markets, in bear markets. And what they found was that adding any amount of gold into a portfolio increased the average rate of return in that portfolio. Whether you added 5% or 70%, the average rate of return increased. But then they looked not just at return, but at risk. And what they found was that adding anywhere up to a 20% allocation of gold decreased the average amount of risk in that portfolio. And so when you take those numbers together, what you find is the sweet spot where they maximized their returns and minimized their risk was a 20% allocation. We don't recommend that clients start off with a 20% allocation because most people have never invested in physical gold and silver before. And we want them to get comfortable with this before they go to a 20% or even a higher allocation. I did see that one question popped up of, is there a minimum clients need to invest in either gold and silver? And yes, there is. We have firm minimums of $10,000. So whether it's on the qualified side or the non-qualified side, we do have a minimum order amount of $10,000, which when we're looking at that 10 to 15% target, if we're trying to get there, that $10,000 minimum really shouldn't be a problem for your clients. So let's talk about the plan. Let's talk about how you get started with gold and silver. Well, congratulations. If you're watching this, you've already done step one, which is watching the webinar. And what our goal is here is to really just introduce you to the fact that it is easy to talk about gold and silver with a client. This is something that they need to hear about, and they need to hear about it from you. And the reason why they need to hear about it from you is because if they're not hearing about it from you, they're just hearing about it randomly and they're getting taken advantage of. This is something that we've run across a fair amount. We'll start working with a new agent and they'll start talking to their clients about gold and silver. And inevitably, they'll find out, hey, I've got a client. I can't tell you how many times I've had this phone call of, hey, I've got this client and, they bought $100,000 of gold and silver just a few months ago. And I want to know what it's worth. And so we'll dig into what they bought. And what we've found is that the vast majority of these retailers sell clients obscure products at incredible markups. And more times than I can count, I've seen people that have turned $100,000 into $40,000 just by buying the wrong thing because they're not being guided by their agent. They're not being guided by their financial expert. And so we want to help you become that financial expert. So after this webinar, someone from National Gold Consultants will be calling you and emailing you. We want to get in touch with you so that we can help get you trained, which is step 3. We want to learn a little bit about your practice and see how we can fit in, how we can help you begin introducing your clients to gold and silver. Now, when it comes to getting trained, you've got 2 different options. The most popular option is doing one-on-one training with someone here at National Gold Consultants. We'll schedule an hour of your time, and what we'll do in that hour is we will run you through a presentation that we run clients through. Actually, the webinar that we would be happy to host for you. And we do that because that way you're able to see exactly what we're presenting to clients, and we're able to answer your questions in real time. It tends to work a little bit better that way. Once you get comfortable with that webinar, what we've found is a lot of our agents will go out and do their own webinars, which is a great way to get this in front of clients. And we've got a turnkey webinar solution for you. We'll create the flyer, we'll help you market it, we'll even host it for you. We'll remind your clients about the webinar ahead of time. And then we'll send everybody a recording of the webinar afterwards. Or if you don't want to do online, or if you don't want to do one-on-one training, say your schedule is very, very busy, we do have an online training program that's available. And just talk to your National Gold Consultants expert about that, and we'll get you the link to that. Then the next step would be start talking to your clients about gold and silver. So many people are looking for a magic bullet on how to bring up gold and silver to your clients. And it doesn't need to be complicated. The easiest way to bring this up to your client is when you're meeting with them, just ask, what do you think about gold and silver? They'll tell you what they think. And so many people are desperate that they'll say, oh, I've always been interested in gold and silver, but I've never known where I could go or how this fits in with what I'm already doing or any of those other things. And once you have that initial conversation with a client, once you find somebody that's interested, what I recommend doing is call in, talk to your point person at National Gold Consultants, schedule a 3-way call with the client. We're happy to get on the phone with you and the client and to run through really why gold and silver makes sense for them, how much they should own, and then we'll walk them through specifically what, they should buy, and how we can help them. And we do all of it positioning you as their point person. We're here to support you in presenting to your clients because we recognize that you deal with all sorts of products all day, every day. We deal with gold and silver all day, every day. Let us be your expert from afar. Let us come alongside you and support you in this. And then the last thing that I'll talk about here on this slide is let's talk about, what it is that we're actually selling to clients. If they're using their non-qualified dollars, we're going to put them into what we typically recommend is US minted coins that were minted prior to 1933. And we do that because these coins are considered a private asset class, which is huge. There is never, ever, ever any reporting required on them. They're treated, as a completely private asset class. And when a client goes to liquidate, there are never any 1099s that are issued. So what I've found is most people like keeping the government out of their business as much as possible. And this is one of those few remaining private asset classes that truly does keep the government out of your business. So on those pre-33 coins, on those non-qualified assets, we recommend that the client take physical possession of their metals. That is what we highly, highly recommend and prefer, because that way the clients know that they have them. They can store them safely in their possession, whether that's in, a home safe, a gun safe, bury them in the backyard, store them in an old cardboard box in the basement, because nobody knows that they have these. Or if they really don't want to take possession of them, we can set up third-party storage for the client. Additionally, I mentioned we can do gold and silver IRAs and Roth IRAs, even inherited IRAs. For any IRA like that, we are required by the IRS to use newer minted coins because they want to be able to track and tax everything that's in those accounts. So we have to play by their rules, which means we have to use newer minted coins. We are going to use Canadian minted maple leafs in those accounts because they're a little bit cheaper than American Eagles and they're ever so slightly more pure gold or silver. And then one more thing on those IRAs, on those IRA accounts, there has to be a third party administrator involved because we want to keep everything right and copacetic with the IRS. So there's a third party administrator that's involved in those accounts that handles all the paperwork, keeping everything compliant. And then those metals get stored out at the Delaware depository. If a client ever wants to take a distribution from their IRA, they can choose to either sell the coins and take the cash out, or they can actually take an in-kind distribution and get those actual metals sent to them. So, whatever your client wants to do, wherever their funds are coming from, we can help you and support you in that. And then, just one final thing I'll mention before we open this up to questions. The last analogy that I'll leave you with on this is I really recommend that with your clients, try and get them to think of gold and silver not as an investment, but more of as an insurance product. If you think about those economic storms that are coming, if you think about all of the storm clouds that are on the horizon, I tell people buying gold and silver is kind of like buying a generator for your house. You buy the generator before the storm hits. And when you buy the generator, you don't stick it out in the front yard and tell everybody, hey, I've got a generator. You put it in your garage, you put it behind the house. And even once you own it, you don't go out into the garage once a year and think, man, I have never used that generator. I should get rid of it. You have it so that when the storm comes, it's there. You can plug it in, you can have electricity, you can continue living your life in a normal way. That's the same role that gold and silver plays with clients. It's a way for them that when these economic storms hit, whenever any of them hit, they're going to be protected. They're going to be able to continue to live their life in the normal way. So it's a way to help out clients and a way to grow your business in the meantime. With that, that's everything that I had to present. I'm going to turn my camera back on. And if we have any questions, I'd be happy to answer those.
Yeah, and Nathan, thank you so much. Tons of awesome information. Really great job. Thank you. I do just a quick question that came to mind is, will NGC buy back a client's coin value?
We will. Yeah, we will buy back anything that a client has purchased from us, and we'll give them fair market value for it. We don't take any haircuts or charge any fees when a
And I think,
client is selling to us. Yeah.
yeah, there was a question about how can a client liquidate there. And I think you kind of answered that question, but I think again, awesome information. I was just as I'm listening to you talk through, Nathan, so many great, I love that the piece about the seconds and how many seconds we've, in terms of the kind of the analogy to the dollars that have been injected.
Yep.
It's really powerful stuff. And I guess I just, two takeaways really jump out at me. I mean, one, there's an awesome opportunity, right, for everyone here on the call of the agents. There's a need, right? Nathan talked about it.
Very
The
much
clients,
so.
yeah, clients need this. They want this. They're looking for help. They're looking for guidance. You're there to give it to them. And the other takeaway, I guess, is, you have awesome resources as agents, to tap into so that you can deliver that guidance and that expertise in terms of, leveraging NFI solutions, obviously, and leveraging National Gold Consultants. They're an awesome partner. They're really good at what they do. So I really encourage you, everyone on the call, reach out to us here at NFI. There's our number there on the screen, 952-887-1239. And you can also obviously reach out to National Gold Consultants. There's, a clear path that you can take to get educated so that you can, better help your clients. So again, really appreciate it, Nathan. Great stuff. Thank you all again for joining us. Again, I know your time is valuable, so we appreciate you spending it with us. And hopefully there's a few things that you took away from it. I know I did. I know there's a lot here that we can sink our teeth into. So please follow up with either NFI Solutions or National Gold Consultants, and we can talk more about how we can really help you start to bring this solution to your clients. So thanks again, Nathan.
You're welcome. Thank you, Chris. Thanks for having me.
All right, everybody. Until next time, have a great day.